All right, what's up, guys? Welcome to today's workshop, today's webinar. So this is usually something that we do, on Monday. I do this every Monday in the Nest Club. I have different things I cover. If it's not a market update or a market scan, I do different educational webinars on different subjects. And today we have a webinar that is going to be very important, right? It's going to be on horizontal support and resistances. And it's not only going to be, this is horizontal support and resistances. I'm also going to show you, how to identify the strong levels, which levels you should have on your chart, and why they're strong, and why a resistance level and support level is strong or weak, and that kind of stuff. And I will also show you, obviously, how to implement this into your own trading, because a lot of times you will see educational webinars and trading courses and stuff. They will show you the theories, but not the practical stuff. But today I will show you the technical stuff, and also how to implement this into your trading with a fairly simple trading setup called the break and retest. And you're actually seeing that right now on the Bitcoin chart. So let's run the partners intro, and right after that one, we're going to jump right into the charts, and we're going to look at examples. And yeah, let's have a great time.
Prime XBT is the most powerful trading platform, offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
YFDI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirbnest.com/bistro. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirbnest.com/Equinix. The Change DeFi app allows you to become your own digital bank with automated financial services that give you complete control over your wealth while enjoying 100% freedom and security. Sign up today at thebirbnest.com/change. Polkadex is a cutting-edge, order book-based decentralized exchange for the DeFi ecosystem built on Substrate. Learn more at thebirbnest.com/Polkadex. Join over 10 million users trading on Crypto.com, the world's fastest and most secure crypto trading platform. Earn up to $50 of CRO with the code CryptoBirb when staking at thebirbnest.com/CryptoCom. Lease Capital is the first launchpad on Arbitrum. Get access to early investments in the most promising projects at thebirbnest.com/leasecapital. Eureka helps creators protect, manage, and monetize their work with the power of blockchain. Secure your rights and your revenue at thebirbnest.com/Eureka.
All right. Welcome, guys. I'm so hyped for this. I think this is going to be very important, very good webinar. I'm actually so I actually have the Birb Nest hoodie on. Like, usually I don't have this on because it's so hot that I'm just sweating like a gorilla. But it's a special day today, so I figured why not have the Birb Nest swag on. Anyway, let's talk about horizontal support and resistances. Before we actually go into the basics of horizontal support and resistances, there's something very important that you need to understand first, and that is market structure. I will host a webinar, perhaps not this week, but maybe the last week of the Congress, where I talk about market structure and how to trade the trends and that kind of stuff. And the idea here with this Congress is that the workshops that we're giving you, like the first one was with Aperture, giving you the basics of trading, the candlesticks and all that, right? You combine this with my webinar that I'm going to do on horizontal support and resistances, and then I'm then also going to do a webinar on risk management, and I'm also going to be looking at trends, market structure, and how you trade a trend. You combine all that and you should be able to actually build some type of trading system on that. And that is our goal here, right? Our goal here is to give you enough free information for you to take all of this and build your own system and your own strategy to be a profitable trader. That's my goal. I want to be able to give you guys as much information as possible so that as many of you actually start trading and become good at it, right? So let me see if I can find the folder I had here with a couple of pictures. Right, so this first picture I'm going to show you is actually part of my trading course that I'm working on. So you're going to see a little glimpse of that, right? So what we have right here is a pretty basic, the perfect market structure, right? You have a overall uptrend right here, right? So that's an overall uptrend with, you got that uptrend here, you get a high and a higher low. So that's a general primary uptrend. And of course, inside this this uptrend, you have smaller trends, right? And that is what we call that's what we mean when we say the price action is fractal, right? On the higher time frames, you might have a big trend, and then you zoom in and you see that inside that trend you have smaller trends, and inside those trends you have smaller trends. And that is something I'm going to be talking about a lot when I do the market structure webinar. But just to give you guys an idea here of the basics of market structure and price action being fractal. It's very, very important to remember that. This is what I mean with market structure. You have basically two types of market structures, right? What's up, Jimmy? We got Jimmy here, the in-house trading psychologist, and I also have Trono Dump here, which is our in-house troll, I guess. And yeah, anyway, so market structure, right? We have two types of market structure. We have a trending market structure and a ranging market structure, right? This is, and of course we have uptrends and downtrends. This is a trending market structure, ranging market structure, and ranging market structure. Those are the two types of structures, right? In an uptrend, you have higher highs and higher lows. In a downtrend, you have lower lows and lower highs. And in a range, you have equal highs and equal lows. Very simple. I'm not going to go into any more detail on that. But this one thing that I want to show you guys is this right here. This is resistance right here, right? That's resistance. That's a higher high. We then create a higher low. Price then comes back up and tests this resistance right here, right? What happens here is price breaks through this resistance, and you will then come down and test this area right here to retest the breakout area. Now, this is what we call the break and retest strategy. In an uptrend, you want to go long. You want to, like, when resistance breaks to the upside, you want to, when resistance breaks to the upside, you want to get, you're going to get alerted, right? And you're then going to be looking at the retest of that resistance area, because if it's an uptrend, chances are that the next higher low will print itself on the previous higher high, which is at the resistance that just got broken. And this is the main setup and the main theory that I'm going to be showing you today, right? Now, for this all to work, obviously, you need to understand the idea of horizontal support and resistances, and you need to be able to identify them, right? Now, let me show you another picture quickly here, where we're going to talk about break in market structure, right? So here you see a downtrend, right? This is obviously a downtrend, lower lows and lower highs. You enter a range with equal highs and equal lows. And this is where the interesting part comes in, right? Here we have the blue box, which is a horizontal level, which has acted as support and resistance, right? So this is a horizontal SR level, a support and resistance level. This right here is what we call a bullish break in market structure. That is when you have a downtrend that trades into a range, and then when that range is broken to the upside, you have a bullish break in market structure, and that is the break and retest strategy right here, and that creates an uptrend, right? Very simple. You look for horizontal levels, right? You look for a break in market structure. There's two things you look for when trading horizontal levels. Either you look for a break in market structure or a continuation of the current market structure. So if you're a trend trader, you want to look for a continuation of the current trade. I mean the current trend that you're looking at. And if you want to get in as early as possible on a new trend, you look for a break in the market structure at the bottom or at the top of a cycle. All right, so that's the basics of market structure and the basics of a break in market structure. Now let's actually look at a couple of price charts right here. And this is Bitcoin. This is the current Bitcoin chart right here. And this is a beautiful example of a break and retest, right? By the way, guys, if you have any questions on anything that I'm talking about today, please write them in the chat, and I will try to cover as many questions as possible at the end of the webinar. I do think that this is going to be a pretty long webinar because I have a lot to talk about. There's a lot of things that I need to show you guys here, and I'm pretty sure there's going to be a lot of questions. So save those questions to the last. I'm not going to be doing any shorten requests. I'm not going to be answering any questions that has nothing to do with what I'm talking about today. And the reason for that is I want the people to watch that's the people that's watching and the people that are watching the replay. I want them to only be soaking up information about what the webinar is actually about. Anyway, here is a horizontal support and resistance level on Bitcoin. And the way I drew this is very, very, very simple, right? We had the previous all-time highs right here, and I like the fact that we have, these candle closes right here, confluent with these candle closes right here, and that candle close right here, and that way you kind of see like there's a pretty nice area right here, and we're going to be shortly I'm going to be using a completely clean chart, and I'm just going to start adding levels, and I'm going to show you my process of adding the levels, right? But I just wanted to show you this example right here, that we broke resistance to the upside, right? We then had a rounded retest of that breakout level in an uptrend, right? This is an uptrend. This is obviously an uptrend with higher highs and higher lows. You're seeing resistance right here. You're seeing price breaking resistance to the upside, and you're then seeing price coming down again to retest the breakout level. That is a break and retest. It's a perfect break and retest. And that is also why I was so surprised to see that the sentiment on Twitter and in our Discord server turned very bearish. Like, why? Why would you be bearish on the most bullish thing that could happen? And the most bullish thing that could happen is for price to come down and bounce off the breakout level in an uptrend. And that is exactly what happened on Bitcoin. This is called a bullish throwback, right? So when you have an uptrend with higher highs and higher lows, the retest of the breakout level is called a bullish throwback. And there's a reason why it's called a bullish throwback and not a catastrophic bearish throwback like you could have thought when you watched the sentiment on Twitter yesterday. And that reason is when you have an uptrend and you're retesting support, chances are that you're going to continue the uptrend, and that's why we always say the trend is your friend until the end of trend. Now, if this level would have been broken and you would instead had a breakout, support lost, support retested as resistance, and then continuation to the downside. Now, this is actually a break in market structure, and actually that would be a perfect break in market structure. But this, if price would have followed these lines right here, that would have been a break in the market structure. Unless you see a break in the market structure, everything's still very bullish, right? And you should be looking for longs, as long as the trend is intact. All right, so let's start with a completely clean chart here of Bitcoin. See if I have any drawings on. Yes, I do. So we're going to remove everything here. And I haven't prepared any levels on Bitcoin here because I want to do it live so that you can, see the whole process in action, like exactly what I'm doing. And I'm going to, just thinking out loud here to show you how my thinking process goes. There's 4 main things we have to ask ourselves when looking for horizontal levels. First, how long has the level been in play? Second is, how many touches does the level have? And third, the violence, is that even, yes it is, violence of the reactions. That's not correctly, all right. Fourth one is it visible on the higher time frames? So let me quickly go through this and talk a little bit about this. First one, how long has the level been in play? Well, all right, so first you have to ask yourself, like, why is it important? Why is the time aspect important here? Well, if it has been in play for a long time, if price has interacted with this level in the past over a long period of time, chances are that it's a very strong level. It's a very significant level, right? If you're getting bad quality, maybe go to the settings on YouTube and switch the resolution on YouTube. You shouldn't be having bad quality here. Most people are viewing this in pretty good quality, I'm sure. So check out the settings on YouTube if you're getting bad quality. Right, so how long has the level been in play? It's pretty obvious why that is important, right? How many touches has the level had, right? So there's a common misconception here when looking at horizontal level. A lot of people say that the more the level gets touched, the stronger it becomes. And it's actually completely opposite. If you have a resistance level, right? Let's look at this. So if you have a resistance right here, and that level gets hit over and over and over and over again, it actually gets weaker with every touch, right? So I'd like to explain it like this, right? This level right here you have 100, let's just say 100 sellers or 100% sellers or 100 points of sellers, whatever you like to view it as, right? With every touch this level has, 25 sellers gets absorbed, right? 25 sellers gets absorbed. So with every touch, you now have 75 sellers left. You now have 50 sellers left, and you now have 25 sellers left. And on the last one, you have no sellers left. And that is how a resistance level gets weaker and weaker with every touch. You now have 0 sellers left because all the sellers has been absorbed. Now, what happens when you have 0 sellers left is you have a breakout. Now, here's the thing. When people say that a level gets stronger with every touch, they mean that the level, a resistance level, gets stronger as support the more touches it has prior to the breakout, right? So right now, when you come down for the retest of this level, all of these 100 sellers are now absorbed and they are most likely transformed into buyers. So the first retest of this level now has 100 buyers because all the 100 sellers has been transformed into 100 buyers. So the first bounce of that support has the highest probability of a bounce with continuation because that has the most buyers. Right? Now, if this level gets tested over and over again, it becomes weaker as support, breaks down, it then becomes stronger as resistance. So this is very, very important to very important to understand. A level does not get stronger, like resistance does not get stronger with every touch, but resistance gets stronger if it flips to support, if it has a lot of tests prior to the breakout. Hopefully that is clear. If you don't understand this, please tell me in the chat and I will repeat it until you do, because it's very important. And of course, the violence of the reactions, right? The violence of the reactions. You could use words as the momentum of the reactions, or the increased volatility when a level gets hit, right? Why is that important, right? So why is that important, right? Well, the stronger the reactions to the level, it means that it's a significant level, right? You look at this right here. Oh, I don't know what happened there. Right, so you look at this level right here. Okay, you get that touch right here. That's a massive reaction to the level. Massive, very, very strong dump, right? Next time you come up into this area, strong reaction. And then here at the top, third time you test that area, massive reaction. And then the fourth time, boom, that's the 50% drop, right? So it's like a insanely strong reaction to these levels. Now, if you look at this right here, still pretty strong reactions, but not as strong, right? Not as strong. And then you come up and test this area, and the reactions to the downside becomes weaker and weaker and weaker, and all of a sudden, boom, you break that level to the upside. So if the level gives you very strong reactions, and like there's a big violence of reactions, you know that it's a significant level, it's a very strong level, it's going to take some time for that level to break. And the same thing goes here with the number of touches, right? So if there's a lot of touches and the violence of the reaction is very strong, you know that once there's a breakout, the breakout is going to be massive. There's also another thing you can look, you could view this, right? So this is resistance right here, okay? So price comes up and test this, is very violent reaction, and then the next time very violent reaction, and the next time very violent reaction, but the lows of those reactions are being, are getting higher and higher. So you might form like a an ascending triangle, right? Something like this, where the violence of the reactions are getting smaller and smaller and smaller. You then know that there's, sellers are not as aggressive, right? So more touches, less aggressive sellers, and that's how you know that there might be a breakout. And when that breakout's happening, this is more useful if you're a breakout trader, and you can use this pattern and look at the violence of the reaction and look at the numbers of touches, and you can then try to predict a breakout, right? You can try to predict a breakout, but I'm not a breakout trader, so I don't really use that. But the way I look at this is I when I see this happening, I start adding alerts above here to alert me on the breakout, because I would then go long on the break and then go long on the retest of that level, right? The fourth thing we have to ask ourselves is this level visible on the higher time frames? And why is that important? Well, let's say that you're a 15-minute scalper, right? By the way, guys, if you're not taking notes on this, you probably should, because the stuff that I'm giving you here, these are the basics of my trading system that I've learned about 4 years ago, and I'm using it every day. This is all I do, right? What I'm showing you right here is basically all you need. And later in the webinar, closer to the end, when I'm going to show you the break and retest system, when I combine all of this, it's basically everything you need, right? I'm getting DMs and questions about indicators a lot, like which indicators should I use? Like which indicators are the best ones to buy and sell? None, right? None. Like the best indicators are no indicators, honestly. Indicators are only to be added once you understand this. When you understand this, you add indicators to confirm what I'm telling you. For example, the break and retest system, if you're using moving averages, you probably only should only buy the break and retest if it's confluent with a moving average, right? Don't trade solely on the indicator. The indicator is there to tell you that what you're watching in price action is confirming. Like when using volume, right? Volume confirms the move. It's not the other way around. It's not like price confirms volume. It's the indicator confirms what you're seeing in price. So don't ask me what indicators are best. The best indicators are which will easily confirm this right here. So if you're trading on the 15-minute time frame, right, and you're a scalper and you find a level and you're like, this is a good level on the 15 minutes, but it's not visible on the 1 hour, the 4 hour, the daily or the weekly. It's not visible. Like the swing traders don't even know that level exists. The high time frame investors, the position traders, they have no idea that level exists, right? But if you're a scalper or a swing trader and you're watching a 15-minute level, and that 15-minute level is also beautifully confluent with a 4-hour level, and that 4-hour level is part of a daily support and resistance area, and that's daily support and resistance area are visible on the weekly. You now know that you have every trader out there looking at this chart knows that this level exists. So you have the position traders, you have the swing traders, you have the day traders, and you have the scalpers looking at the same level. Now, that's some insanely good edge to have as a scalper, because if you can get that scalp entry before the big players move in on the level that's visible on the higher time frames, you can get some insanely good risk to reward trades. And that's, for me, that's the same thing when I'm a swing trader, so I trade mostly on the daily and the 4-hour, and when I find a level that's really nice on the 4-hour and the daily and the weekly, I know that there's potentially going to be some big players moving into this level as well, because they're probably watching the high time frames, right? If they're very long-term traders. So let me give you an example of that on Bitcoin right here, right? So let's see if we can start drawing some levels here. I'm going to show you some techniques that I do when I'm drawing levels, right? So on TradingView, you activate the magnet tool here to the left, right? The magnet tool, which basically means you're going to snap the line to the closest candle close or the closest wick, right? So use the horizontal tool. You can press Alt plus H, will automatically add a level right there. And if you have it closer to these wicks, it will automatically snap to those wicks. So what I do first of all is by the way, the line chart is a very good tool to use if the levels aren't clear on the daily. So the line chart is actually very, very good to use to be able to find easily the best levels, right? So what you want to do right here is you want to look at this chart right here on the line chart, and I usually don't do this. Usually what I do is I just have the candlestick on, and what I do is I just add a level right here. Boom, right there. I add a level here. I add a level, here. I do that quite quickly, right? And then maybe I can adjust it right here. But that's because I already know what I'm looking for, because I've already done this for like 4 or 5 years. I know exactly what I'm doing. So when you see me do this on my live streams, understand that it's not only about that. It's about years of practice and years of doing it the way that I'm about to show you. So you start with the line chart. You press Alt plus H, or just press the horizontal tool right here, and you try to find good horizontal levels. So you look at this one right here. I like that one. I really do like that one, because you have first resistance right here and a major breakout. And the same thing goes with breakouts. If there's a very violent breakout, you know that the level is significant. If it's like first you have a touch of resistance right here, major rejection, and then you have the next touch is a breakout, and that's a major breakout, you know that there's a significant level. So the next time you hit this level, it's probably going to act as very strong support and resistance area, right? So you have violent reaction here, violent breakout, breakdown, strong resistance, kind of like a fake out, but then again, you're supposed to view all the, actually forgot about that, but you're supposed to view all horizontal levels like areas, right? So if you have a horizontal level, make sure that you view that level and there's a buffer zone around that level, because price will never hit that level perfectly. So if you add a box here, you can see how this also makes sense, because there's a lot of nice price action inside this area right here. And what I did here, I just used that high and that low to create a zone. And this is how you should view the horizontal levels. Price is never going to hit that perfectly, right? And that's how you should view your levels. Anyway, you see here they have that fake out, and then you have that rounded retest right here of that level. So that's a very good level to have, right? A very good level to have. And what I like to do is I like to add more levels all over the place to see if I can find a cluster of horizontal levels. Where there's a cluster of horizontal levels, means that level is stronger, and you can then combine that cluster of horizontal levels into a zone. So let's see if we can find something like that right now. So we have select that low, then select that low. Maybe here, we got something right here, here, here's something. There's going to be a lot of levels on here, but we're going to start removing them as well. So a lot of levels are all over the place, like that one. We're then going to be kind of going through these and to see like which one are the best ones. I'm just selecting tops and bottoms here on the line chart to see if, you know, which ones kind of make sense here. Going to be a lot of levels, but we're going to be removing a lot of levels as well. All right, so let's start with this. As you can see, a lot of lines, right? First thing you will notice is there's a lot of lines down here. There's no lines here. There's a lot of lines here, a lot of lines here, and obviously no lines up here. My Windows needs an update. No, I don't think so. I have it's updated. No, oh man, it is. Let's hope it doesn't restart. Anyway, so down here you have a lot of horizontal levels, right? Down in this area, it's very, very strong support most likely. And here you have a good level right here. You have a lot of big cluster right here, which means that should be a good support right here. So what we do right now is we go down and we try to kind of adjust it. We remove the ones which kind of makes no sense. Which ones are the strongest ones? We go to the candle bar right here, and we're going to be focusing on some is going to be removing these below, because they don't really, because we're trading up here right now. So we should be focusing on the levels that are closest to the current price. And that is also one of the reasons we do that, is because we want to have a clean chart. Obviously, you don't want to have a chart like that looks like this. It's just ugly. You can't really trade something with a lot of levels like this. It makes no sense. So your goal now is to only keep the best ones. I'm going to remove that one. I'm going to keep these two because I think they're very, very nice. And I'll remove that one. We go down here. And honestly, what I'm going to do here is I'm just going to connect all of these lines. This is going to be a massive level. Maybe too big, but I'm just going to be connecting all of these lines right here to begin with. I then remove all of these lines. I have a more cleaner chart, right? Looks better, easier to trade. And it makes sense. It's a major level. I mean, it's very wide. It's 10%, but it's a major level. So we got to keep that on, right? It doesn't really matter how wide the horizontal level is. Everything that matters is like, does it make sense according to price action and market structure? And yes, this is part of the behavior of the market structure. So it needs to be wide, right? Now we can, of course, if price starts coming down here, into this area, we can then focus on the rightmost side of the chart and the most recent price action to kind of make this zone smaller. And that's also something important that I forgot to mention is most recent price action is always going to be the most important price action. So if you're basing your level on only historic price action, and you see that level makes no sense according to current price action, you remove that level, right? because it needs to make sense according to the most recent price action, because that's what matters. What's happening right now and like the last couple of days and that kind of stuff. Like you always adjust the level according to most recent price action. All right, so that's one level right here, and you now see that we have that cluster right here, and I really actually do like this level. So I'm just going to add a zone somewhere around here. And remember, when adding the zones, it doesn't have to be perfect, right? Nobody cares if you, like, some people might care, but that should be just a example of them not being traders, because we all know that the levels doesn't have to be perfect. Like everyone knows that. Like you can't predict exactly what price is going to do. So the levels and the zones are only there to kind of give you they're only there to guide you in the right direction. Like if I have a blue box, if I have a blue box as an SR level on my chart, you should know that somewhere around that area something interesting might happen. Not exactly on it or exactly in the middle, but somewhere around that level. Right, so we have a level here, so we remove these levels right here as well. Now we have a cluster right here. So what we could do is just encapsulate all of these levels right here. And by doing that, you actually do get a pretty decent support and resistance level. So that's what we're going to do first. But there's something off here. I don't really feel it here. That there's something is not right about this. I feel like we need to make it a little bit smaller. So we go back to the line chart to see if it makes more sense on the line chart. Well, can we adjust this more on the line chart? And we can make it smaller, like maybe like this on the line chart, and we can maybe connect that low. So that's a little bit smaller, and I kind of like that. Looks better on the daily as well. We can view these as kind of like fake outs, and I like that, right? I like that. And now we have this level right here, which is found by connecting these candle closes right here to the highs of this price action right here. And that is the last break and retest that we're getting. And that's the most recent level, basically. Now we have this level above. Now, what I'm going to do here is I'm going to connect these candle closes here on the daily and these candle closes above for the closest resistance. And there you have it. Now, in my opinion, these are the most important support and resistance levels for Bitcoin, and I've found these by first going to the line chart and just adding a bunch of horizontal levels all over the chart where I thought they made sense, and that would be a guide on where I want to add my zones. And then when you had a cluster of horizontal levels, you use the rectangle tool, right? So this one right here, the tool that I'm using to make the level, first I'm using the horizontal line, which is found up here to the left. Have the horizontal line right here, and then the tool that I'm using to actually add the boxes is a rectangle tool, which is right here to the left. So that's it, right? That's it. How I have found my horizontal levels. Now, what I really do, what I do most of the time is I remove these. But this is just personal, right? Because I only care about the closest resistance and the closest support. Because, like, why would I care about this level below? Why would I care about that level? Because this level hasn't been broken yet. I would only care about, this, and this level if this level gets broken, right? So why would I even have these levels on the chart before that level gets broken, right? So what I do is I wait for this support to break, and then I start looking for the next support below. And the main reason for this is, I don't know if you remember how the chart looked before removing all of this. I mean, I had horizontal level all over the place like this. It just looks weird, right? And then when I add the indicators, it's going to look something like this, right? And that's just not you can't trade like this, right? When you're working in an office, hopefully, you have a clean desk, right? And then you have a clean workspace, a clean desk. Your office needs to be nice and tidy to kind of have that good work environment, right? And it's the same thing when trading. Your trading view chart setup is your desktop, right? You don't only have to have a nice desktop and a nice office, you have to have a nice charting setup, because this is where you live. And that's what we call chart hygiene, right? And for me, chart hygiene means as few levels and as few indicators on the chart as possible. When I have everything on the chart, this is what it looks, right? This is what it looks like. This is everything I use. So this is all I do. Like this is my analysis, this is my setup, this is my trade, and this is everything I need to successfully trade. And you will see that new traders have like maybe stochastics RSI, the stochastics, the MACD, blah blah blah. They have like 4 different indicators down here, and they have like 200 million difference of moving averages and all weird shit, you know. And it's not needed, because, like I said in the beginning, I only use the indicators to confirm what I've showed you guys today, right? All right, now let's talk about the break and retest setup. Now that you know how to actually put the levels on the chart, let's look at the break and retest strategy, how you can actually trade that. I'm going to be showing you exactly step by step how to trade this setup, and it's surprisingly easy, right? Surprisingly easy. Before we do that, let's go through a couple of questions. I think it's a good idea to market at all levels, but then hide them if they are far away from price. Yes and no. It's a good idea, but from a time management perspective, not a good idea, because what you have to do is you have to actually first remember to go into the object tree thing here and actually add them back, right? Now, what's quicker is, you know, so if I see a level below, here's a good level. I like that one, right? It took me 5 seconds to actually go in to this object tree right here and find the level, add them, remove them, add them, remove them till I find the right one. It's going to take me much more than 5 seconds. And it's something that's very important, because when you're on a daily basis, maybe scanning 400 coins, you know, it's going to take you maybe 2 hours per day to do that. You want to like 5 seconds compared to 20 seconds is a lifetime, right? So that's also very important for me. Everything I do is about time management and being time efficient, right? That's why I have 2 levels, few indicators. It takes me, I pull up a shot, it takes me somewhere between 10 and 20 seconds until I see a setup. If I can't see a setup in the first 10 and 20 seconds, I move on to the next one, because trading is supposed to be simple. A good setup is supposed to just hit you in the face. You pull up the shot, you see a good setup, it's like the whole computer screams at you, just buy, 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 or sell, sell, sell. Right? If you can't get that in the first 20 seconds of pulling up the shot, you move on to the next one. All right. Another question: Do you highlight levels on higher time frames? Example: daily, weekly, and take the trade space. Yes, I do. I do always look at the daily, the weekly. Try to kind of you first start with the weekly or the daily, and add the levels, and then you go into the 4 hour and you adjust the levels based on the 4 hour price action, and I then take the trade based on the on 4 hour. How do you analyze new coins without history? I don't, because like technical analysis is based on past price history. So if you don't have any history, there's no TA. It's impossible to do TA on stuff that has no price history. It's a simple fact. So you can't is the simple answer to that. And if you have a coin that's like, oh, it's released yesterday, it has 1 candle, how do you do technical analysis, which is based on future, like past price action? How do you do that on like, there's one way you can do it. Like if the coin has been trading for 1 week, obviously you have to watch the weekly chart as a multi-year chart, and then you go into like the 5 minute or the 15 minute, and you have to view like the 5 minute and the 50 minute in the same way that you would view the daily and the 4 hour on a normal chart. But then again, it would be scalping. It's so if you're a technical trader, it makes no sense to buy new coins. It only makes sense to buy new coins if there's any fundamental analysis done on them. All right. So, is there a point in TA in all coins since they're so strong? Is TA of Bitcoin all we need? No, of course not. Of course not. No. You do TA on every shot that you. Honestly, that is for another webinar. I feel like, but no, you have to do like everything follows Bitcoin. Yes, so you have to do TA on Bitcoin. But if you're only trading altcoins, you might view Bitcoin as a guide on if you should enter altcoins or not. So if Bitcoin is breaking out and altcoins are moving with it, then you start looking at the altcoins because like if Bitcoin gives you a break and retest like you just did right here, this is a good excuse to go long in altcoins, because if altcoins are showing some strength here and Bitcoin is pull a break and retest of a significant support level, you know that Bitcoin is telling you that it's safe to go long in altcoins. Now, if Bitcoin breaks down like this and altcoins are showing bearish market structure, you're not supposed to go long in altcoins, right? How about the diagonal lines? Which one is more important? Trend lines is nothing compared to horizontal levels. Like horizontal levels is everything, right? Trend lines, diagonal lines is just nothing compared to horizontal levels. Like a trend line, you should not trade a trend line unless it's confluent with a horizontal level, right? Now that's me speaking, right? And now you might have traders out there who are trading only on trend lines, and that's fine. That's awesome, right? But please do not do that. Like horizontal levels, please focus on horizontal levels. And it makes no sense to like look at this. It's a break and retest of a trend line, but it's right into a resistance area, which is like a major resistance, a horizontal resistance area. But I don't care because I'm only trading a trend line. Well, you're gonna get wrecked. That's not how it works. I promise you. Focus on horizontal levels. Right. So a couple of more questions. Yeah, 3 paid plans for TradingView. Which, in your opinion, is the good one? So they're gonna have a Black Friday. They have every year they have a Black Friday sale for like 60% off. Buy the most expensive ones, because if you're serious about trading, you need that one, because it gives you 400 alerts. It gives you unlimited amount of short layouts and that kind of stuff. So go with the most expensive one. I think it's like. I don't know, a $150 or something like that for a year. And if you're really serious about trading, that's the one you should get. And if it's, if you feel like it's too expensive, maybe you're not serious about trading. That's my honest thoughts on that. Quality products cost money, and you really get what you pay for when it comes to trading. It's an awesome platform. Right. You might have answered that with what's the best action when news flushes all TA you've done? Stop loss gets hit, right? If you're in a trade and this happens, stop loss gets hit. I'm not trading based on news. I'm not trading based on fundamentals. So, yeah. If it happens and you're in a trade, stop loss gets hit, and news will not flush all the TA I've done. It's when happens. Support and resistances will find its way to work, even when news. Like if there's a major dump, it's going to dump down to support. It's not like it's going to dump down and find a totally new support that's never been tested. That never happens. Like it never happens. Look at all the time Bitcoin has dumped. It dumps down to support, or pumps to resistance, right? What other strategies can be used in trading horizontal support and resistances besides break and retest system? Well, maybe 1,000 different ones. I'm not kidding. Like probably 1,000 different ones, and it's up to you to develop one. Honestly, there's a lot of different systems out there and a lot of different strategies out there, and it's up to you to backtest, and then do some more backtesting, and then forward test for a couple of months, and you'll test and test and test and test and test, and then eventually you'll find a system. It's not like you're just going to go out and buy a system and like, oh, I'm profitable. That's not how it works, because you have to have a system, and then you need to adjust that system to your own personal trading style and your own personal lifestyle. I mean, if I were to buy a crypto trading system that was based on the daily close, well, that wouldn't really work for me, because the daily close happens at like 11 at night, 11 in the evening. So I wouldn't be able to trade that system, right? So it's important that you have a system that's, you know, in accordance to your own style, and you will have to develop that on your own. Everyone develops their own trading system. Like nobody out there has bought a system and it's just worked. Like every professional traders have developed their own trading system by months and maybe years of testing. All right. What horizontal levels do you go after in price discovery? There's no horizontal levels in price discovery. Simple as that. If price is in price discovery, there's no resistance. And if you're talking about support, well, then you use the same techniques that I've showed you today to find support. What's a major indication for support and resistance line beside looking for a breakout? So I think I covered that today quite extensively. What you should look for, and it's the idea that I talked about. You know, the how long has the level been in play? How many touches does the level have? The violence of the reactions, and then is it visible on the higher time frames? That's how you kind of understand if it's a very strong level or not. One more question, and then we'll go into the actual setup. Let's see. All right, this is a good one. Any advice for a student with low budget getting into trading? All right, so first of all, save money. All right, save your money. Save your money. All right. So I mean, I'm pretty sure that you're not used to hearing this, but if you don't, okay. So if you have a small amount of money, if you have a small capital, you shouldn't be trading, right? I know that's not fun to hear. It's not really what most of you want to hear, but I'm here to give you a realistic expectations of what trading is about, right? So trading, like trading the way I'm doing it, right? I'm a swing trader. I guess some would call me a day trader, but I'd like to call myself a day trader, swing trader. I take on average, I'd say 1 to 2 trades a day, sometimes even maybe it's 2 trades a week. But like if I only had like a small capital, let's say $500 or $1,000 or perhaps $2,000, like I wouldn't be able to survive trading the way I'm trading now, because my monthly goal for my short-term trading system and strategy and my swing trading system is like 5 to 10% profits a month, right? Now, I wouldn't be able to pay my bills and survive based on 5 to 10% profit a month. Now, if I have, you know, a 50K or a 100K portfolio to trade with, now 5 to 10% a month would be a decent amount of money on a monthly basis. But if I have 2K, obviously I would not be able to survive on that. So if you want to, like, if you really if you've decided that I'm going to trade with this capital and I'm going to make it grow, you can't do that by doing, you know, this type of trading, right? Unless you're very, very experienced. So what I would do is I would take those money and I would put them into like the NFT market, the metaverse gaming market. I would divide that portfolio up into low caps and just gamble, basically gamble on getting a potential 10x or 100x on. So you take 10 10 tokens that you have done extensive research on and fundamental analysis on, and you really believe that in the next 5, I mean, let's say in the next 2 to 5 years, these products might explode, right? And you take maybe 5 to 10 of these products and you put your portfolio in those. While doing that, you learn how to trade, right? And you learn how to trade by watching webinars like this one, and you then open up a demo account, right? And when you're profitable trading demo with a system for about 2 months, you go live with very small capital. And if you're profitable for like 2 or 3 months trading live, you know that you know how to trade, right? You know how to trade. So, you know, when you're doing that, when you're learning how to trade, perhaps one of the altcoins that you've invested in has exploded, and that might give you the funds to start trading. Now, if that haven't happened yet, you contact a prop firm, which might be able to fund you with a 10K account or a 200K account, so that you can be able to trade other people's money, because you have proven yourself to be a successful trader. There's a lot of companies out there, like FTMO, for example, does that, right? Where you can, do their challenge, and if you are able to show that you're able to get a 10% increase in a month on your trading capital, they will be able to give you a large sum of money to trade, and the profit split is like 70-30 or something like that. And I think that is the only way to do it, because you will not be successful trading if you don't have the money. Like, having a large amount of capital is number one, So you hear stories about people entering the crypto market with a very small amount of money, and then it's just exploding, and they become rich overnight. Well, that's 1 in a million. It's 1 in a million. It's not going to happen. It's not going to happen. You can't bet on that to happen. Crypto, it's not like everyone in crypto will get rich, It's not like just because you invested in Bitcoin, your $1,000 is going to become millions. It doesn't happen like that, right? All right. So, and we're in the bull market. We're in the bull market right now. Everyone's making money. It's like everyone's a genius. Just wait till you enter a bear market. How are you going to survive in a bear market? As a professional traders. As professional traders, and that's one of the reasons why I'm trading the forex market as well, because I know that when crypto winter comes, and it's going to come, when Bitcoin enters a bear market and the crypto winter comes, maybe we're going to have like a multi-year bear market where nothing moves. That kind of sucks. You don't want to be trading that shit. So you can, of course, be trading that market, and there's going to be, of course, a lot of opportunities in a market like that as well. But the forex market is giving you much more opportunities when that happens. So, yeah. All right. So let's go and look at. Right. So this is a good question to kind of start off the break and retest idea here. In your opinion, what is the best trading strategy for beginners to get accustomed with the grow into making? Yeah, this is it's just what I'm going to show you today. All right, so this is an uptrend. High, higher, low, higher, high, higher, low, higher, high, higher, low. Right. The break and retest system is based on. Yeah, short hygiene, man. This yes, is the some days I wish I could ban that dude, but I'm not going to because he actually adds a lot of value to the chat. So the break and retest is based on, you go long on the break and retest of resistance in an uptrend, because you do expect that this trend is going to continue, and that is the break, and that is the retest, right? And that's where you go long, right? Now, if this is the 4 hour, if this is the level right here, and we're watching the 4 hour right now, there's a couple of things you should be like. You have a couple of options, right? So first option is when you see the breakout and you see the price starts to come down to the breakout level, you can put in limit orders, right here, but the stop loss needs to be below the last swing low that broke the level. So on the daily, let's say that this is on the daily or the 4 hour or whatever, that's the last swing low prior to the move that broke the level, because this is the move that broke the level, right? And that's the swing low prior to that. So the stop loss needs to be here, right? So if you enter here and stop loss is below that low, now the last local high, which is this one, which is a higher high, right? This is the last higher high. So the last local high, that is going to be your first take profit. Now, the first take profit should be at least 1-to-1 risk to reward. Now, obviously, looking at this chart right here, it is not the fact, right? The risk to, well, actually, it's pretty almost 1. Right, so let's, so this would be the setup, right? This would be the setup. That's the first way to do it, right? Just buy here, very safe setup, and you might be going for an average of 2 hours, something like that. So you might be looking for a trade like this where you exit 25% at the last local high and then 75% up here. So the average risk to reward would be somewhere up here. So the average risk to reward on this trade would be 2, which is acceptable, right? I'd say that for most people, you would have a win rate of somewhere between 40 and 50%. So you're okay with a plus 2R on each setup, right? So that's the general principle. Now let's see if we can actually find a live example on this. I have let's see if I can. I have cake. The cake. This is a high time frame SR level. Let's see if we have an example on Ethereum. I'm also going to see if I have other examples of this setup. Just give me a second here. So this is actually a good thing to do. You can see here that I have in this channel right here, I have a couple of folders, which is one is called good trades, right? Good trades. And this folder is just, I've just saved trades that I think are very good, and I've added explanations to them right here. And I also use these as screensavers backgrounds, right, for my desktop. So whenever I'm at my desk, I will always see the best setups, right? And I'm going to be bombarded with the visuals of how the best setup look. What will the Birb Nest be focused during the crypto winter? No, not only Forex. Of course, it's going to be crypto. It's probably almost going to be crypto. And there's always going to be opportunities in the crypto market, either, no matter if it's the bear market or not. But I personally am not going to be trading crypto as actively as I'm trading Forex, because the current members of the Birb Nest might have seen that when crypto is quiet, I start posting Forex calls, right? And when crypto starts moving, I start posting crypto calls. Because the probability of getting good trades in the crypto market is much higher when there's a clear trend. And when there's no clear trends, you're always going to find a clear trend in the Forex market, right? Anyway, let's see if we can find a good... so here is Ethereum, right? So I think this is the good... Let's go back. Let's actually look at Ethereum here to see if how this setup would have been traded. So we go to Ethereum. Yeah, here it is. So this is a good example of a break and retest setup, right? You have resistance right here. So you know that this is a fairly strong area because this right here is a very clear swing high on the daily. This level right here is very visible on the daily, and also when you go way back in history. So this is a good level, visible on the daily as a very significant swing high on the daily. You can go to the daily and see it right here, right? And it also kind of makes sense if you go to this level right here and look at the lower time frames. So you look at the 4 hour, right? And you're gonna have an alert right above here. So let's say you have an alert right above here. So what happens here is you have a major breakout right there. So that's a major breakout. Now you're interested in this, right? You're interested in this. And your first idea, like the first thing that comes to mind is, I want to have my stop loss somewhere below that low right there. Like that's going to be my invalidation level for this trade right here. So you want to have the stop loss somewhere below here, right? That's the first idea. And the setup would then look, you might want to enter somewhere inside this zone right here, right? And something like that, and see if you're going to get continuation to the upside. So the first option, like I talked about before, is you add a limit order or just layer orders inside the zone right here, and you're probably going to get filled when it retests that level right there. Now that's the simplest way to trade the break and retest, right? And the another way to trade this is, and this is a little bit more complicated. I do not recommend this. And of course, if you're going to trade this system, you should do back testing. It's insanely simple. If you have a very high win rate, like if you have a 60 or 70% win rate on this, obviously, 1.6 would be a good. So here I have a question. How do you realize the difference between touching 2 and 3 times the resistance and a double? Well, I guess there's not really a difference, right? You could look at it like, you could view it as a resistance area getting touched 2 times or 3 times, or you could view it as a double top or a triple top, right? Now, for me, a double top would look like this, right? You come up and you test resistance like this, and the double top would, so the double top would give you an M structure, right? Now that's a double top, right? Now the double top is only really confirmed when you break down here. If you break down here, and especially if you break and retest that area, that's how I trade the double top and the double bottoms. Like I look for the M structure, which should be visible if it's a double top, and triple tops I don't really care about. Because it's going to be like this, right? 2 touch, 3 touch, and you're like, wait a minute, this might be a triple top. Well, if it breaks down, yes. If it breaks down, yes. If it breaks down, resistance act as resistance. But if it breaks out, so it's just a matter of how do you like. It's just a matter of what's your perspective. Are you using triple tops and triple bottoms in your analysis? And if you do that, you probably have a reason for doing that, and you probably back tested that and all that, and that's all good. But I don't do that. I don't use that much. I only use like a double bottom and a W and that kind of stuff. But that's something we're going to be looking at in another webinar. What is the tool you use to calculate the risk to reward ratio? It's the long and short tool in TradingView. You can find it to the left here. You have long position and short position, and this is where you will find the average R, which is right in the middle right here. So that's the most easiest way to trade this setup right here. Now you can add moving averages, and you can add indicators to this to find confluence within this area right here, right? So we first add the weekly and the monthly open. You can see a weekly open right here, not really in perfect confluence. Yeah, the 4-hour 20 and 50, you see here the 4-hour 50 EMA, perfect. Yeah, the daily 20 and 50, not really confident here, but that 4-hour 50 EMA touch right here, absolutely beautiful. And this is what I talk about. You use the indicators to confirm the simple price action, not the other way around, right? So that's the first way to use this, right? Look for a rounded retest, and the retest, it has to be a rounded retest. And why does it need to be a rounded retest? Well, that's because you need to have enough space and time between the breakout and the retest, because you need to give price needs to give, or the market needs to be given enough time to accept Ethereum above this level. That's what you get, that's why you and how you get fake outs, right? If the level isn't, if price doesn't have enough time above the level, it's going to turn into a fake out, because people have not accepted Ethereum above this level, which just turns into wicks and a fake out. But here, right here, you have a strong thrust candle, right? A candle that just breaks the whole level, price trades up here for a while, and now most likely people have accepted Ethereum because it moves quite quickly. It doesn't have to be above for that long, but the longer price stays above the level, so the longer time there's between the breakout and the retest, the better, right? The quicker, then it has a higher chance of turning into a fake out. So that's the first way of trading this. Now let's look at a little bit more advanced way of trading this, right? So what you do in that case is you wait for confirmation of a bounce, right? You wait for the confirmation of the bounce. So you first look at, you have two levels of interest here. You go to the 4 hour, right? And this is the zone, right? You have two levels of interest. That's the breakout candle, right? So first, what we want to do is we want to add the last immediate high, like the last immediate swing high prior to the breakout, which is going to be that one right there. And then we're going to be looking at the last high, or the last touch, like the last major rejection of resistance prior to the breakout, which is that level right here. So we now have two. We now have two important levels right here. Wait, just give me a second. I need to answer this. All right, you cannot call yourself a trader. You're not a trader if you're not familiar with these tools. I'm sorry, guys, but if you don't understand what risk to reward ratio is, if you don't understand what the basics of risk management is, you are not a trader. You're just doing this as a hobby, and you don't really understand what you're doing. All right. Risk management is the first thing you should understand before you do this. And I'm going to have a webinar about this tomorrow, I think. But like you're saying here that it's used for risk to reward ratio, and it's not usually used by new traders like myself. All right. Yes, they are. They are used by everyone. Everyone who starts trading should be familiar with this. And if you're not, you need to be. You need to be, because if you don't understand the relationship between win rate and risk to reward, you're going to lose everything you own. You're going to lose everything you own. And if you don't lose everything you own, you're purely making money on luck. All right? This is the number one rule of trading. Understand risk management. You can view it like this. You can be a terrible trader but still make money with good risk management, but you will never be like, you can make money with good risk management, but you will never make money with bad risk management. You can have a very bad trading system and still make money with good risk management, but you will never make money with a very good system with no risk management. That's fact. That's fact. So if you're not using this tool and calculating the risk to reward and understanding what your minimum risk to reward is for your win rate, you need to start doing that. All right. And learning, it's not worth learning risk management. It's not like it's, you're writing, it's definitely worth learning risk management. I don't enter without it now. It's not worth learning risk management. It's a crucial. It's crucial in trading to learn risk management. So it's not about should I learn risk management or not, because it's not a question. You learn risk management and that's it. And if you can't understand the importance of risk management, please do something else. Find another hobby. Trading is not for you if you can't focus on risk management. I'm being harsh, but I want you guys to become traders and earn money and not lose it all. Right, so back to the actual setup example here. We have the last immediate high prior to the breakout, and we then have the last major rejection of resistance prior to the breakout. These are our two main points of interest right here. And we can assume that price is either going to hit that one, or find an equilibrium between these two areas right here. Yeah, I'm I'm sorry if I'm being too harsh on you guys. It's not like it's just purely based on the fact that I really do care about all of you, right? It's not being me being an asshole or something like that. Like it's just there's too many people on YouTube just hyping this shit up and just basically giving you all these false expectations. Now buy this coin and you're gonna be a millionaire by 2022. It's not, that doesn't work like that. It doesn't work like that. It doesn't work like that. So I'm here to give you the truth. I'm here to tell you that trading is going to be the hardest thing that you ever tried to master in your life. It's probably one of the hardest professions there ever is or ever were. So take it seriously. And if you can't take it seriously, please save your money, because you're probably going to be making a lot of money elsewhere, you know? And yeah, that's it. So we look at price here. So what I'm going to show you now is what I'm going to show you now is how you can get much better entries on this setup by waiting for a confirmed bounce at the area of interest. And the area of interest are these two levels, or the area around these two levels. So by doing that is you first look for the 4-hour breakout, and when you're about to see that price starts to retrace down to the level, you go to the lower time frames, like the 1 hour, for example, right? So you now see that price is about to give you a nice rounded retest. See if we get that. We want to wait until price enters that zone. Look at that. Comes down, it enters that zone, and has a nice bullish candle, right? Kind of fills that zone. Very nice wick right there. I could probably have bought that candle close right here because it just looks beautiful. But let's wait for a actual rounded bottom right here. Look at this. That's one more bullish candle right here. We're inside the zone right now. And that's one bullish candle right here. Now, what you could do is you could enter here with stops below that wick right here. So you enter on that candle close right here, and you're just going to have your stop, either stops right below the wick or stops below this swing low right here. Because remember, like, talked about the 4-hour swing low, but now we're on the 1 hour. So that's the breakout move, and that's the last swing prior to the breakout. So you could have your stop loss. If you enter here, you could have your stop loss down here or just below that wick. So let's take a risky trade here and put it right below that wick right here. And then we look at the last highs right here. Now we're talking about a 3.36R trade, just up to the first TP, right? That's a 3.36R, just up to first TP, which means that you're going to be making 3.4 times the risk. So if you're risking a $1,000 on this trade, you're going to be making $3,360 on this trade. Now let's see how this plays out. Now, obviously, I don't know how this is going to play out, but this is how you kind of confirm the bottom. You have, you just bullish price action and somewhat of a nice rounded bottom right here. And you're just going to take a bet here. Like I think it's going to move higher. You just say it's, oh shit, that doesn't look very good. But let's see how this goes. Yeah, okay, so it moves quite nicely here. And now, obviously, I don't know if this is going to work out. Now, if I really would take a trade here, if I really would take this trade, I would probably take TP1 here and then move stops to entry and then TP2 here. So let's see if this works, right? All right, the TP1 is hit right here. So what we do now is we move stops to entry. So this is now a free trade. We're taking maybe 25% profit or something, and we've taken profits, and this is now a free trade. Let's see if this gets stopped out or not. And so right there we get stopped out, but still it's a small winner. Now you can play around with the take profit strategy and the idea of moving your stop loss or not, right? So if you don't want to move your stop loss up to entry, it should be based on you back testing this idea, right? So it should be based on you back testing this idea. Now, if you found that moving stops to entry actually gets you stopped out and then price reverse to the upside again, well, then it's not right for you to do. And we're all going to be viewing the chart differently. So we're all going to be interpreting the information that the candles are giving us differently. because we're different people, obviously. So you have to back test this. You can't just watch this webinar and say like, oh, it's working for him, it's going to work for me. It's not like that, right? You have to back test. So see how this works, right? If I weren't have moved my stop to entry, this might actually have worked out quite nicely, right? You see here, that's last TP. At last TP, this would have been a phenomenal trade, right? A almost 3.4 trade in a matter of 4 days, pretty long, but still pretty good, right? And then you hit that level above and then boom, straight down to entry. And you could have perhaps repeated this setup, I don't know. But that's the general idea, right? You look for a break of resistance to the upside, you look for a rounded retest. There needs to be time and space between the break and the retest. All right, guys. So it's been 1 hour and 20 minutes, and I hope you guys really enjoyed this webinar. If you have any questions, we're gonna have like, let's say 5 minutes of me answering some questions if you like. I'm gonna go scroll through. Yes, and the tool that I'm using to, and yes, let's talk a little bit about backtesting, right? Let's talk a little bit quickly about backtesting, because I told you guys that you're gonna take this setup and you need to backtest it. So you need to understand how to actually backtest. Up here, you have a replay function, right? So that's the replay function. You can press the replay bar right here, and then you press the candles right here to go back in time, right? Like that, boom. You can then control price here with the left and like the right arrows right here. And this is how you backtest, right? This is how you backtest in a very, very simple and very effective way, because right here, you can actually try the break and retest setup for yourself. Right, so Ethereum is breaking out here. Now let's see if we get a retest or breakout level. Are we gonna get a retest? No. But right here, we had a retest, right? So we go into the 1 hour. That's a pretty good retest right there, right? So you might want to see if this would have been profitable if you enter on here, right here. And that would be the trade. You might want to be taking profits at maybe 3 or something like that. So that's a profitable trade. So you book that as a profitable trade. And then you have another break and retest right here, where you broke and retested that level right here. Let's see here. And we might want to enter, somewhere here, stops below that one. See a 3R. And that's let's see if this is a winner. That's a loser. So you book that as a loser. So here you have a 2.9R winner, and here you have a -1R winner. And that's how you do it. You backtest this idea and you see if there's any profitability in this. So we have some stuff in the exclusive resource channel in the Nest Club Discord. So check out the exclusive resources channel. You will find a backtesting template, and not sure about the win rate and the risk to reward. But I'm going to start working on preparing the webinar for risk management, and I might have some stuff for you in there. All right, guys, I think that's it for today. I can't be giving you too much at the same time. It's going to be hard to digest. Is there any automatic way to backtest this strategy? Well, it's only possible if you have a systematic setup, right? It's only possible if you have very specific things that you look for, and it's a systematic system. So, for example, it might be that I'm going to buy whenever there's a 1 hour bullish engulfing on the retest of the 20 EMA and the 4 hour where the stochastic bull cross below 30, right? If you can code that and you can write a script on that and backtest that and create a strategy in TradingView, which I've actually done. And it's not profitable with my system, with my coded strategy, but it's very profitable when I'm manually backtesting. And that's because in my trading, there's some discretion involved. I need to You gotta understand that after a couple of years of trading, you start to build up some type of intuition, right? When you enter that flow state of mind, when you can trade effortlessly, and everything comes automatically, there's another layer. There's another almost like spiritual layer where you just know if you should take the trade or not, and that's intuition. And you can't replicate that. You can't replicate that with if it's not a 100% systematic system. All right, that's it, guys. Take care, and let me know if you have any questions. Just tag me in the Congress chat or in the Nest Club chat if you're a Nest Club member. All right, guys, take care, and see you guys in the next one.